Okay, the TDU Devil's Edge. Now, I've got in front of us here the March 21 S&P E-mini S&P contract. I'm recording this on January the 3rd. The markets are closed, of course, right? So I'm not connected to any data feed. So in fact, I'm actually going to take this off the screen here. So we'll just hide that. Now I have a 417 TDU Uni-Renko bar setup and the Devil's Edge below. And what I'm actually going to do here is I'm going to go back to earlier in the day here. We'll start out at the open here. Additionally, I have on the Trade Devil's initial balance indicator just to frame the day, right? Just to kind of help so we're just not floating out in space. So here's the open of the day, and there's a few lines on here. It's the open, the opening range high, the regular session open, the IB mid, just some things that come with the initial balance indicator. But of course, we want to focus on the Devil's Edge down here. Oh, additionally, I should mention I have a 21 period EMA on the chart as well. Now let's focus on the Devil's Edge down here, because what we have here in essence is we have a turbocharged MACD, and we've done that by combining 5 different indicators into this one single indicator. So let's break them down one at a time so you understand what you're looking at, and then we'll talk about application. So at its core here, you're looking at the MACD here. So the line that you see here with the dots on them, that's the actual MACD. Now I'm using the default setting here, which I find to be very effective. Of course, that's up to the user's discretion if you wanted to tweak that slightly, but I've just got a standard MACD setting here. Now, unlike the traditional MACD where you'd have a signal line, what we've done here is that we've applied a 20 period, 1 standard deviation Bollinger Band setting to the signal line of the MACD. So what's called is the river here. So you see the center line here, the white line here, that's the signal line, and then I've got 1 standard deviation on either side of this. Now, for those that are familiar with trading the MACD or the MACD Bollinger Band or MACD BB as it's often called, traders that use this will often characterize or call this what I've got here is kind of slightly blue background here. This is known as the river here. So when we're outside of the river and crossing back into the river, you'll hear that terminology frequently, and I use it all the time here when whether I'm doing a live stream or talking to members or just demonstrating things to members during the trading day. Right? So we have outside the river, into the river. Now, I'm also using the indicator, the TDU Devil's Edge, to hit the paint bars here. So what you'll note here is that whenever we have white bars, we are in the river. We're in between the Bollinger Band. So while on the edge, falling here, if the MACD is falling, you're in these kind of orange color. If it's rising, it's in this slight off-white color here. But whenever the bars are white, that means we're in the river. Right, so that's part of it. Now, in addition here, we've got a few other things to bring to your attention. You'll note here that whenever we go outside of the Bollinger Bands, we get a larger dot here to emphasize that's happening technically, right? So you see it here coming outside on the downside, and then here coming outside the upper band here of the Bollinger Bands, we get a larger dot here to emphasize the fact that we have a potential for a trending period to be in place as the strength of the market pushing outside of the Bollinger Bands. It implies the potential for strength, right? Not guaranteed, right? As you can see here, it's very short-lived here. You got a little bit of a pop from that. So it doesn't mean, you know, get long and you know, just let it rip. It can mean that here being a good example, right? So the longer you see the green bars, right, the longer you know that you're outside of the Bollinger Bands, and once we turn white, then we're back in the river. Okay, so you have that happening here as we look at the combination here of how the bars are being colored and the movement of the indicator itself. Now, additionally here, we have a center line. And you'll note here on the center line very clearly that we have these big yellow dots. Well, what we're doing here is we're combining an indicator that you may be familiar with. It's called the TTM squeeze. It was first made famous by John Carter. And this is a technical phenomena that takes place when we have a reduction of volatility. Now, it's defined, the TTM squeeze, and as Carter defined it, is when the Bollinger Bands, which are a measure of volatility based on a standard deviation, get inside of a Keltner channel, which is a measure of volatility tied to the average true range. So when the Bollinger gets inside the Keltner, we have what's called as a TTM squeeze, or a lack of volatility. It's a reduction in volatility, and often traders will want to be leery of entering the market during that reduced volatility. But it's certainly something to pay attention to, because as we come out of the squeeze, often you'll see an increase in volatility. So on the center line, whenever you see that yellow dot, that means the Bollinger Bands are inside the Keltner channels. A reduction in volatility, just a heads up. Doesn't mean get out of the market, doesn't mean don't enter the market. It's just to bring your attention to the fact that we have a reduction in volatility. Right, now, in addition to that, on the center line, you see color coding here. Now, the color coding is another indicator that we've built into this, which you may or may not be familiar with. A lot of people are not, but it's called the vortex indicator, and it's a native indicator to NinjaTrader. So you could apply it to your own chart here, and it certainly has value for as a trend indicator. So here, I have it down here, and again, this is just native to Ninja. Just come right down here to, you'll find it. Vortex indicator, right? So I'm just going to apply it here. It's relatively simple conceptually, but there's some, oh, I got to make it visible. Bear with me. So let's get that visible here. So I have it already on the chart. Let's make it visible and let's apply it. All right, so you'll see now, if I get some crosshairs on here, the signal is whenever the signal line is the red dash line here, right? So whenever we're crossing the blue line here, that's a sign of strength. So if it's rising and we're crossing up above, we've got the potential for an uptrend. If it crosses below, as it does here, where you see here we go red here on the center line, when that signal line crosses the blue average line, when we go down, then we have a potential for a downtrend. And you'll see how that's reflected here on the center line. So it tends to be more of a trend confirmation signal. It's not something you're going to find at the pivots, but as the market starts to move in that new direction for the potential of a trend change, this is a great confirmation of it, right? So it's a confirming indicator, which is why we want to be aware of it, but we use it as trend confirmation based on the color coding of the center line. As a result of that, there's no need to put it on the chart because you have it reflected on the center line. So thus, I just wanted to demonstrate that to you. And if you were unfamiliar with either of those indicators that I just talked about here, you could go over to Google. What is the TTM squeeze indicator? Right, lots of good sources on what that is. Right, or see a visual representation of it. Same thing with the vortex indicator. If you're not familiar with it, and if you're particularly interested in the formula that's behind it, well, Investopedia is a good source, right, for any indicator to look up here, so you can learn more about how it's used, the buy signal line. Then if you were interested in the actual formula of it, you can certainly find it just with a quick perusal on Google. So I just draw those to your attention. For some people like to really dig into the formulas behind them. But you can see it here reflected. You just put it on your chart and you can see the value that's potentially there. So we like to have that, but it's not so much for entry, but as for confirmation or continuation. If you were in the trend, it would be an indicator that the trend is strengthening if we get the vortex going green here, and potentially a time to consider reversing or getting out of it as the center line changes color. Right, so with that said, now let me take it off the chart since it's redundant via the center line. So let me just hide it here. We'll take it off of visible. All right, so let's look here. Now, there are a couple of different ways to trade the Devil's Edge or a MACD BB and with our enhancements here. One is some people will tell you that it's most advantageous to trade when the MACD line here reflected by the green dots here, when that gets outside of the Bollinger Bands. And that's certainly a very valid way to trade it. Same thing on the way down. When we get when we get outside of the lower Bollinger Band, the red line here, we're outside of the river. Another way to think of it, when we get outside of that, we have the potential for that long trend. So we see here, we go outside here, we get this long move here. Now we're back in. Note we go white in the color bars change to white because we're back in the river. Now that's not a bad, if you're taking it, let's just say you didn't get the absolute move. Well, there's 9 ticks you got here, and then now we're coming back into the river here. So perhaps you got 9 ticks off of that sell right there. All right, same thing here. Well, let's take this off. Let's say, okay, so here we're coming outside. Here's the first green bar. So if you got that all the way up to the red bar, well, there's 11 ticks that you got here, because you wouldn't know that that's going to become white until you see it cross into the river. But there's nice little punchy here on a 417. These are not massive rips here, but then later in the day we get something like this where you get outside the edge. So here's the potential, and this can be set to alert you, and alert can fire here when we get outside the edge. We get outside of that, well, there's 32 ticks, right? You got 400 on that move before we go back into the river. All right, so that's one way to use it, and that's the very typical end of the day rip. Well, it's about 2 o'clock in the afternoon where that big upside move happens. Right? It doesn't matter that it's reduced volume here. The same phenomenon happens day in, day out. So that's one way to trade it. Now, note here, when you first got into this one here, the vortex had already turned. So note what happens here. You're coming out of a squeeze, then the MACD goes out above the river. We're outside of the river, crosses the upper standard deviation band. That's a single standard deviation. You can set that to 1 or 2 or 3, whatever you'd like. I find it most effective at 1. So when I get out of that and the color bars match, everything's rolling right up in here until we get back into the river. All right, so that's one way to trade it. Personally, I like to get I'm a bit more aggressive than that. What I'm looking for, what I like to see, is when we've come outside of the river, now we come back in. So for me, this is an entry signal for me right here, because I've been outside the river, now I'm coming back in. Now the question is, can we cross the river? If we get across the river, then I get outside, I've got the potential for a much larger return on my trade, because I'm taking the trade right here when I'm first getting into the river. Right, we're in the river down here. I'm in the river now. I get the turbo boost, I think of it here. Now that's giving me all the potential to get up here. Now I got 39 ticks. So this can be a very effective way, and it's particularly effective with Renko bars. Can be an excellent timing indicator for entry into the market and exit. So always the question is, can I cross the river? Which is why when you look at through the course of the day, here would be a good example. You don't want a river that's so narrow that it's 2 BBs, right? So each BB is just a reflection of the bar, right? So this little BB here is just 1 bar. All right, so you want a wider river here, because there's more potential here. Because of the potential for this to cross the river and then go right back into it, this would not be an ideal place for a short. Well, obviously at that moment in time, with the market's trending higher. Now we've broken outside of the initial balance. We get a little pullback. We pull back to the 21 period EMA. This is not a good spot for a sell, right? Just looking at what the market's doing. Now, of course, always easy in hindsight, right? When it does that, you're not positive, right? That could fall. But the tell here, and what I want you to note here, is how narrow that river is. I want a wider river. So if I get across the river, I will typically trade, if I'm day trading, I'll typically have multiple contracts. So I'll have a scalp target that might be anywhere from 4 to 12 ticks, and then I'll have a runner. And the runner I may attach to, well, there's a couple of different ways to do it. But initially, the first goal is always to get your scalps out, right? So then you, more commonly, a day trader might move have his ATM set to pull his stop up to break even, so then it's just a free trade. So the first goal always is to get your scalps out, right? If you're trading multiple contracts. Right, at least, well, that's my approach to it, and that's what we teach. So if you're in the river, can I get across the river? Now you will find that there will be times where you will not cross the river, right? So here's a good example here. So if you were looking at this here, anticipating, okay, we've got the move. Oh, let's get it this here. So we've got the move back into the river. So we think, okay, we're going up. You're anticipating perhaps you're going to get a trend outside of the initial balance here. Well, we don't cross the river. Now, what you'll find is that a failure to cross the river is really a strong sell signal. If it can't make it across that 1 standard deviation river and it turns back down, if you were long off of the entry here. So for example, if you went long here on the move back into the river and you're just anticipating, oh, I got a swing, I got a little retrace, and now we're going off higher. If you don't get across, that's time to, at the very least, tighten your stop. If not, exit the market. If not, reverse. Right? It depends on how aggressive you are as a trader, and whether you're comfortable doing all of that. But the failure to cross the river is a huge tell technically. Now look what happens here. We in that failure to cross, we reverse. Now we get outside of the river. Now here's yet again, right? We go in the river, failure to cross. More weakness again in the river, failure to cross. Now here we get a nice. Here's the nice move here that you ultimately get. There's another 12 ticks on this before we're back in the river. Now, here's slightly better because I've got a wider river and I've got a potential for that move here. So you likely got your scalps out here. So if you're first in here, so you got 6 ticks. So if you were after 4 ticks for your initial scalps, like that, likely a scratch. You didn't get a runner here. You were perhaps looking for a continuation here. So swing, retrace. You're looking for the next move up. Doesn't happen. We do get up outside the river, but then we roll back over again. But these little moves here, where we make the center line and then roll over, those are definitely something to be paying attention to. Now here's the one we looked at earlier, where it's an excellent signal here. We've got a moderate river to cross and then lots of upside here as we get on the outside of the river and then it runs. Here's a little dip back into the water. We get one last little kick before now that whole process starts all over again. So this, I would tell you that as I use it here, I use this almost exclusively for my entry timing. Now, I don't just take every turn as it goes back into the river. It needs to be done at significant technical points, right? It could be a measured move. It could be the test of the IB high. It could be VWAP. Obviously, there could be all sorts of technical levels throughout the course of the day. It could just be prior support and resistance. But this could be traded very profitably just with the devil's edge. Right, it's really an outstanding, an underutilized indicator, particularly for day traders, particularly with Renko bars. Very, very powerful. Now, for my typical setup would look like this. I'll take this off since we're not connected to any data. So here, this is a very full feature. This is, I've got a lot going on here. But here's the devil's edge, the wicked wave, and the devil's pitch here. I've got just volume up down here and a moving average of that. So this would be the kind of thing that I'd be looking for here as I get confirmation from all of these indicators here telling me, hey, I want to go up. Now, rather than letting the edge paint the bars, I'm using our Renko paint bar color, so I'm getting yet another confirmation here. That's ease of movement here, but you can see these here can be really effective here for timing your entry. Now, that you can do some filtering here as well in conjunction with some of these other indicators. So perhaps you would only take buy signals when the wicked wave is above the moving average, which is again this is a turbocharged RSI. But these kind of combinations can be very powerful. But you may not have all of those indicators. So here, if you were just starting out with this, can be very, very effective for timing, either doing it as I would encourage you to consider, at least do some testing on when we cross from out of the river back into the river, or if you want to be a little more conservative, you can just take those moments when we push outside of the upper standard deviation band or lower band, get outside of the river. Additionally, some of the settings that you have here, you can use the devil's edge to trigger arrows, right? So we can apply the arrows that you would find for timing, right? So the dot would be a match with the arrow. So here, as we push out here, and an alert can fire, there's the buy signal, sell signal, buy signal, right? You can do it either via the dots, the alerts or the arrows. I tend to leave the arrows off myself. It's just one more thing on the chart, and as you just saw, mine is full of plenty of indicators. So I typically leave it off. But if I was just trading without it, I might consider it. Now, one other thing that I'll bring to your attention here are the volatility bands, which are down at the bottom. Now, because I'm using a full suite of additional tools, I will typically make these transparent, but I want to just show them to you so that you know that they're there. I want the lower line here, so show you this. All right, so this is something you can add to your devil's edge here to get some sense of volatility, expansion, and contraction. So, for example, you see if you look at the distance here between the two lines, it's rather moderate, and then as the volatility increases, now we've got much greater distance between these volatility bands. So it's just one more measure of volatility that can be useful to you, particularly when you get outside of the volatility band. So here, take note here, we're well outside of the river, outside of one standard deviation. We're additionally outside of the volatility bands. Now you get a move back in, but we don't get a massive move here, right? So don't assume just because we get that it's a rip all the way to the upper band, right? So that's not the way to interpret it. But it's just one more measure of volatility expanding and contracting throughout the course of the day. All right, so here, very narrow, right? Very narrow contraction here because the market is just going straight up, right? Those small little pullbacks, but the trend is clearly moving higher. All right, so there's a lot of features in this that really give you a tremendous amount of insight into what's happening in the market all through one indicator. Okay, so I think that's worth looking at, and then I'll just finish up by we'll show this certainly doesn't have to be used on Renko bars. So here it is just on a 2,000 tick chart. Same thing. I'm letting the edge color the bars. And you'll see here, this can be very effective here. And this is more traditionally how traders would use this if you were applying this to a tick chart. So as we get outside of the river, across the river, upper standard deviation band, now as we get all of these bars that are outside and before we come back in, this can be a good entry note. So look what happens here. So we get outside of the river, above the upper standard deviation. The vortex is green. Right, we are moving higher, right, and the dots are green. Paint bars are green. This is just telling you buy, 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 buy. Right. So here, early in the day, here, let's see if I can find. Well, there wasn't much of a sell-off on that day. And we can use this first one here. So here, well, we've got a squeeze, right, on the 2,000. That's giving me a long squeeze here. So this may or may not be something you wanted to trade. Let me find something better on the day. You'll find, well, this was part of the reason you're seeing so many squeezes here is because this was holiday hours trading, right? So we didn't have a lot of volatility. So it's not surprising that you had that contraction in volatility. I'm trying to find a day here where we get a decent sell. Here's all right here. Right, so we're pushing out. So vortex is, note, we get a squeeze in the background. Vortex is red. Very narrow river. We get across it. Here's the signal. Here's the enhanced dot, or you could place an arrow there. Bar color goes red. We get outside of the river, outside of the lower standard deviation band. Here we just put a toe back into the water, but not enough to where we go in the river. Note the bar color stays red. The EMA stays red. Everything here is saying sell, sell, sell. Right, from the first bar down, right? So from the first bar all the way down, well, there's 57 ticks, right, on a 2,000 tick chart, right? 57 ticks before we're back in the river, and now we're crossing the other side. Now the bars go, right? Just the reverse of that, right? We got the buy signal here. Bars go green. We're outside the river. Vortex goes green. Now we do go into a squeeze here, right? So traders. It's just an alert, right? You have a reduction of volatility. Doesn't necessarily mean get out of the market. Just be aware that you've got a squeeze. Now here, note here, this is kind of quiet that day. But then again, here, right? So it's just, and then the outer bands are there. That's just optional as to whether or not you want to use them. On my full setup, I tend not to put them on there because I'm using our devil bands, and that's 4 times the ATR and 5 times the ATR. I use those as my measure of potentially overbought, oversold in theory, right? Just if you're getting 4 or 5 times the ATR, that's heads up. I want to be aware of that. So I use that rather than the volatility bands on the edge, but you may not have the devil band, right? So this would be the full suite. This is exactly what I use, right? So I've got a lot of things on here, but this is my This is my day trading template for pretty much all the markets that I day trade when I'm using Renko bars. All right, but the edge, that's what I use for timing my entries. All right, so there you go. That gives you enough to perhaps think about and do some testing. Keep in mind that you can always request a demo, a 5-day demo of our indicators. That's full. These are fully functional versions. It's right on our website. You can just go to TradeDevils.com, click on indicators. That will take you to our indicator site, and you'll see it very clearly. Request a 5-day trial. We will send you that. It's a zip file, and you can install whatever you're interested in, and again, fully functional for 5 days. All right, there you go. Okay, guys, talk to you later.